So GM, everyone, please take a seat. Everyone who's interested. We're waiting for the fourth panelist, we just saw him. He should be here in a minute. Yeah, people, come in here. We are navigating through the regulatory turbulences of the Web3 wave, so we got everything. We got a little bit of taxes, legal parts, finance, DeFi, something from regulatory. So it should be interesting. Maybe we do a raffle at the end. We raffle out a crypto license from Stefan. So feel free to sit down here. While we still wait on Stefan, I'm going to introduce the panelists and myself at the end. So next to me is Joanna Rindel, the General Counsel at the World of Women, right? So she's representing the legal part here. She also clerked at the Court of Justice of the European Union, which I find quite impressive. She will represent the legal part. Next to her, Peter Grosskopf, I think he's pretty much known in the space, representing the finance part, is currently CTO, right, at Ultimate Money, and also had several positions at the Börse Stuttgart and Solarisbank. And we have our last panelist, Stefan Mögelin, Senior Officer at the Bundesanstalt für Finanzdienstleistungsaufsicht, or better known as the BaFin. He will represent the regulatory side. And then we are complete. I will kindly, every now and then, represent the tax part, but I know the tax part is not that interesting, so not too much. So, welcome, guys, to have you here. I haven't introduced myself. My name is Florian Zawodzki. I'm a tax advisor with EY, based in Berlin. If you have tax questions, come on afterwards. We'll figure out everything afterwards. Everything working here?
Not my mic, and also not this one.
Give it another try. Yeah.
Okay, now it works.
Sounds good.
Okay.
So, okay, then let's dive into our panel. But before we look in the future, let's take a little look in the past. So we are speaking on regulatory turbulences. For you personally, also for your business world, what have been the most influential regulatory turbulences and also then accordingly regulation you have seen in your specific fields? Go ahead, please.
I get to start, so I get to pick the MiCA card, and everyone else has to figure out something else. No, but I think, especially if we just talk about NFTs, for me personally, I mean, even though the MiCA regulation doesn't regulate NFT per se, it still includes them. And I think given that there isn't any country in the European Union at the moment that specifically regulates NFTs, they are sort of intertwined a little bit in financial regulations, in tax, in IP, and so on. It does help that at least they are recognized to some extent under MiCA. And then in general, I know we're looking back now, but also looking forward, I am very excited about more guidelines to come from ESMA into 2024.
Try if it works.
I think it works. Well, I personally, I think I wouldn't talk about regulatory turbulences because I think when there are turbulences, I would say the whole crypto space is in turbulences. So we've seen like the Terra Luna case, we've seen the FTX and so on. So somebody has to drop those names here, and I think we had like a development in parallel with the MiCA regulation, which has been discussed for years. Started like as the Lex Libra, kind of regulating the Libra stablecoin, but then over time became a much bigger instrument to regulate the whole crypto space, especially the centralized one. And I think this is kind of like meeting at a perfect point, I would say, because if we want adoption for the centralized crypto space, I think the MiCA regulation can be a pretty good instrument to really generate trust to consumers and to businesses, so that they know what to follow. If it's about regulatory turbulences of myself, so we built Ultimate, a non-custodial wallet, and we launched from Germany. And maybe some of the listeners have followed that. We've also been in interactions with the BaFin, and as I learned on a BaFin tech event during the past 2 days, that we might have been one of the reference cases as well, to really look into the DeFi space, what's going on, and also the kind of the like when somebody is creating a link between the user and liquidity pools, for example, that this is also seen as investment brokerage. And so in the end, I think the regulatory space is evolving and is also adopting what's happening on the markets, and I think that's important to realize.
Okay.
Yeah, okay, so also from my side, so I guess that regulatory turbulence is not only on the supervisory side, but also on market participant side, is the speed and the upcoming complexity of provision. So actually we have different regimes in member states in the European Union, and now with the upcoming MiCA regulation, we get a harmonized framework, but that is still in transition, so we have to see how it actually works, and in particular in Germany, so we already have different types of crypto asset in our supervisory and regulatory framework. And therefore, it is not that easy to identify what instruments or tokens are in scope, and also what Peter mentioned, what services are potentially linked to supervised activities. So when it comes to decentralized or distributed infrastructure, so then we might see new services on top of these infrastructures, and that might be closely linked to financial or banking services, and that is really difficult to identify, and also to then see how the regulatory framework will fit. And also on the market participant side, it's not that easy to get a whole picture of what is actually applied to such instruments or services. And therefore, I can only suggest or propose to get in touch with us, to get in contact, to distinguish how that might be interact, and if there is some linkage to supervisory requirements.
Okay, okay, thank you. So, yeah, I hear 3 times MiCA, or you all mentioned it. I wish I could tell you something else from the tax world, but not that much. So we also don't have that much. MiCA is also kind of a basis of some other rules we will get in 2026 in the tax world, but we can have more on that later when we go to an outlook, what we will have in the future. So, but let's do one by one. Let's maybe start with the decentralized finance concept. So I look more into you guys' direction. For me, I find that actually pretty interesting to don't have banks involved, to have more the trust in the system, as I understand, which is the real intention of having Bitcoin, like the original idea. From my, just a little side note, from my tax perspective, don't do DeFi tax returns. When people did DeFi are no fun at all, no one wants to do it. But yeah, from your perspective, Stefan, how do you experience the DeFi space? What are you currently working on, apart from implementing MiCA and all that stuff? What is your current take in that field?
Yes, so actually there's quite a lot of work also on our side to have a closer look how the existing framework will fit to those protocol functions or decentralized finance, or as already mentioned by Peter at our Fintech, there were some statements about how we will get in touch with it or to scope this. So most likely we will look at the existing framework. So as mentioned, we already have crypto assets in the German regulatory framework, and therefore we have to look if these services are really decentralized, or is there some kind of a group of organizations or people which have also economical value in it, or getting earnings, or get some kind of governance structure in. And then we have to decide case by case. So if that is some kind of supervised activities like banking or financial services, or that is an additional service on top, and therefore also for business people here. So it is really important not only to have a look at the tech side, so what is possible in the smart contracts and protocol functions, but only take into account that it could be closely linked to providing services or access to supervised services. Yeah.
Okay, and like from your personal perspective, I know that administration people are usually not that inclined to tell personal opinions, but from your personal opinion, do you think the DeFi world is something the real world needs and benefits, or do you just have to deal with it because it's there? What is your personal take?
So from my personal point of view, I guess it is also at least challenging existing not only services but also infrastructures, and in particular when it comes to from tech opportunities, so what blockchain or DLT or other new technologies could provide, so like smart contracts, automatization, there might be potential benefits and also some new ideas. So actually we see quite a lot of some kind of duplication of existing services, but a more automated side without central functions. But from my personal point of view, so there are still development and a high pace in developments and innovation, and therefore it is the idea to keep it some kind of open and to see what there will be evolved.
Okay.
Yeah, and also I think with DeFi, so also how I define it, I think the new thing about it is that you can build financial services in a different way because the value chain is created in a different way. In the past, you had like these silos, whatever. There's the trading platform, there's the bank, there's like a brokerage company and so on. And then in the DeFi world, you have the lending protocol, you have the wallet, you have the decentralized exchange, and kind of if the lending protocol needs to liquidate assets, it can be done on the DEX. And these two services are integrated through the smart contract. The smart contract is an open API, so maybe the DEX doesn't even know that the lending protocol is using that. And so these loosely coupled services, and that you can kind of construct a new value chain to service financial services. I think that's a very new concept. And when also talking about regulation, I think so there's also quite some beauty with it, like even with the tech stuff, because I think the tech stuff is hard at the moment because the tools are missing. But kind of like the data is there, and so there's simply the tools that are missing, and maybe there's of course the like the treatment with the financial departments that needs to be harmonized and so on. But I think per se it's much better than because the data is open, and when it comes to the regulators, I think you could, for example, and that's what we also discussed at last Fintech 1.5 years ago, that you can have for example embedded supervision, so which means you can kind of like a protocol could directly send certain data to the regulator, or you can define certain processes in a way that you audit it once, you implement it in the smart contract, and then it's not changed anymore. And so therefore, I think there's even opportunity to create completely new regulatory regimes because everything is automized.
Okay. I would also, like still remaining in that part, be really interested in how the MiCA was created, like from a regulatory perspective. Do you, like all national authorities, meet somewhere at the EU Commission, put your heads together and then come up with the MiCA, or how did that evolve?
Yes, so actually with the upcoming evolvement of token economy, and also in particular driven by stablecoins, so we have seen in the past, or initiatives at least, so there was, that is in the right of the Commission, so there was a draft proposal by the Commission, and the idea was to have a look at what is similar to services which are also or already authorized and supervised to ensure market integrity, consumer protection, and therefore, I guess for some who are familiar with a traditional regulatory regime for financial instruments, so they will see that specific requirements in MiCA are somehow duplicated and adapted to specific types of crypto assets. So we have requirements for offerings, for trading, and also for providing services in, but some other are not covered. So in particular, those who are not linked to the characteristics of financial instruments, so providing access to earnings or profits or payments. And as you are also aware, in MiCA, so there's a specific chapter with additional provisions for stablecoins, so asset reference token and e-money token, to really address the issuance and also risks related to the use as a means of payment of such instruments. And therefore, then this proposal will be discussed by the co-legislators, the Parliament and the Presidency, and there also the jurisdictions and the governments are part of it, and then there's some kind of trilogue which then lead to the final outcome of such regulation.
But I also think that that it was a development over time. So like I said earlier, it started with regulating Libra, or at least like whatever, blocking Libra from the European market, or whatever intention there was. Then it became kind of the package to harmonize regulation for crypto services, and I think that was the main part. And I had the impression that over the, let's say, last 12 months of discussion, as DeFi became a topic, and also NFTs became a big topic, it was at least my impression as like looking from the outside, and also gave a little bit of feedback to MiCA just to improve. So I had the impression that especially DeFi and NFTs were kind of like squeezed into it in the end, and that's, I think, what I really disliked about it, because I think the MiCA was a pretty great instrument to regulate the centralized services. And I think, so if I would have built it myself, I would have focused on that, and I wouldn't have squeezed in certain things, because this makes things less clear than it was before. And with the current, or with MiCA, how it's going to be adopted, we have this word fully decentralized. So if something is fully decentralized, then it's excluded. But what does it mean? Yeah. So I think nothing is really fully decentralized. So therefore there's really there's unclarity what DeFi services now will be affected, what not, and so on. And I think so this could have done better.
Okay. So, in slightly moving out of the DeFi space, but still sticking in it, stablecoins. I want to speak about stablecoins, and then I want to move on to the digital euro, which I understand could be done with a blockchain, but as far as I understood, the proposal at the moment is not intended to be backed by a blockchain. But stablecoins, and with a provocative statement, they basically all don't work as far as I see it at the moment. What do you guys think? That's a provocative statement. Do you think they can work? We need such a thing? What do you think?
Peter, you want to go first?
Okay, I go first. So personally, I'm a big fan of stablecoins, and I'm a big fan for years now, because, and I can tell you why, because now looking at the crypto space, how it developed over the past years, I think stablecoins is a great technology that builds a bridge between, let's say, the normie world and the decentralized world. Because in the end, it's an asset which is adopted, governmental currencies. I think everyone knows it. It's stable and so on. And you use the technology kind of to build rockets on the back, so that you can send a euro or a dollar around the globe in real time on this new settlement infrastructure, and build applications with this. Also, like Stefan said, you have smart contracts, you can automate stuff, you can have conditional payments, and you can integrate such a stablecoin into value chains of any kind, and therefore, so I think it's a great instrument, and I personally believe that stablecoins will be the first kind of like product that the crypto space produced that really will hit the masses, and because it can be built into any kind of product, and maybe in the next years also our parents are settling money from A to B, of course with their interfaces they are used to, but potentially they move the money on these new rails.
Okay.
Yeah, so from my perspective, I guess there's a large demand on the market side, because that is an alternative settlement asset. So as we actually do not have some kind of a euro or any other kind of currency or means of payment, which is actually there. So, and a large variety of businesses and tokens in the token economy are closely linked to payments. So I guess that is what we need on an infrastructure side to really take opportunity of the benefits provided. So, and as long as we do not have a digital euro, being it a retail CBDC or wholesale CBDC, which is also some kind limited to access criteria. So I suggest that it is really there a large market demand to have such an instrument. And as we see in MiCA, but also on an international perspective, we are dealing with stablecoin arrangements and different types thereof, and how they can fit in as an alternative settlement asset for payments. Yeah.
Mm-hmm. So you see a need. Then moving along to the digital euro, I can give you my perspective. I see there are several roundtables at the Bundestag. You have been there, also speaking there. So I feel, and there's a need. I feel there's like the intention. So why shouldn't we do it? Let's try it out. Other jurisdictions try it out, but apparently not that much is moving. I heard that there is this commission proposal. Maybe you can also elaborate a little bit on that. But what is hindering the digital euro really from your perspective?
Yeah, so first of all, I think if stablecoins wouldn't have been there, we might not have talked about digital euro today, right? So I think there was quite some inspiration from the crypto space, so that it's possible to settle money in a digital way, and so that we want to do this now natively with a digital euro, which is released by the European Central Bank. And regarding the developments at the moment, I think there's still a lot of stakeholder hearings. I think the difficulty for the digital euro is that there's so many stakeholders. There's the states, there's the ECB, there's the banks, and there's the consumers. And I think that the banks are lobbying pretty much to make sure that it doesn't interfere too much with what they did before. And so, just as somebody who loves or really loves the crypto space because it's open, permissionless, and everyone can use it, and so on, I think we will get something which is much more closed. And there are these limits discussed for the retail CBDC to protect bank runs. So I think in general it makes a lot of sense to release the CBDC. Will it kind of kill stablecoin adoption? No, I don't believe that, because already today we have a multitude of forms of digital money. So our current money is digital already, and whatever we have, Visa, MasterCard, PayPal, we have e-money, we have stable coins. We will have deposit tokens also as a form of digital money in the future, and we will have the different kind of CBDCs. So therefore they will all coexist and will find its niches. And that's perfectly fine. And maybe one last comment on also why I believe that CBDCs make a lot of sense. Now looking at China, we very briefly talked about it before the panel. So there's so China also has like a geopolitical intention with their digital CBDC to kind of use it in their free trade zones and kind of make it the main currency from like a huge group of countries. I think the digital euro was not designed that way. It's more kind of targeted for European users. But what I heard is that there is even plans that other countries are able to adopt the digital euro as well. And I think that's a pretty interesting development, that kind of the euro can become much more important also for like non-European countries.
Okay. Yeah, please.
I have a question to Peter. Do you think that because it's not... I think in general with, I don't know, stable coins or CBDCs and so on, you have the digital yen or other CBDCs. Do you think it's going to be like a competition between these as to who spreads their own fastest?
Well, I think there's always competition, right? So everything, especially also in the digital space, the faster we can digitize, the better, of course. But I think so that the yuan will become kind of the main currency in the world. I think that will take a long time at least. I think that the dollar is still the main currency, and with stable coins, and we already have a digital dollar if you want. So I think there's already quite some adoption. But I think China is really understanding it pretty well, that they can use this as one instrument to increase their power outside of China, and that's what we also need to have an eye on. And if we can create such thing with the euro as well, I think that's good for every European.
Okay, Stefan, so like on finishing on that really finance topic, stablecoin or digital euro, what do you prefer?
So yeah, I guess from point of complexity, if there would be an interoperable digital euro available, so there would be no need for having stable coins. But as you already referred to, there's a Commission proposal which is, at least from my understanding, also linked to a central infrastructure. So there's also a central operator providing the infrastructure with the banks. And the second one, it is also in use, not limited, but there is some discussion. So it is really used as a complement to cash or other means of payment. So at the point of sale, and therefore it might not be available and also interoperable to technical solutions which are based on DLT or blockchain or other technologies. So therefore, I guess it is still limited. And on the other side, the Euro system also explores wholesale CBDCs, but that is also limited for two reasons. So one is the scope. So it is for wholesale payments in the interbank market, so between financial institutions and market infrastructures. And the second is that therefore also the access criteria are still limited, and therefore many of the fintechs or other business companies could not participate in these trials, and also later on they are not a member or part of the target system. So for settling in central bank digital money. So that is my take here, and therefore I would say that these alternative settlement assets like stable coins are actually a good or an idea to allow different use cases and business opportunities based on new technologies.
Okay. Okay. Yep. So then let's finish with the really with the finance stuff. Like to summarize it a bit in my words, I understand that we need a lot of regulation there, because if we move backwards to Web 2.0, where we didn't have all the stuff we had, we still had financial instruments. They have been regulated ever since. So we now basically have to see, okay, which is similar to the traditional financial instruments. We need regulation or maybe not. But we also, in my perspective, have really, really new stuff, such as NFTs, which we didn't have before. Like I could also have given out vouchers for anything, but that basically wasn't doable, so to say. But NFTs is something new, and they also somehow, I think there is more room for discussion that we, or if we need regulation. So moving to your perspective, I know World of Women is partly also an NFT project. What do you experience? Also, you also mentioned MiCA. You can also mention from my perspective, where we also have low-level regulations which are based on MiCA, where it's still also, like for MiCA, it's unclear if NFTs are in there. From our tax perspective, it is phrased in different words, which also say basically NFTs are more or less not in there, but they might be in some instances. What is your take on regulation specifically on NFTs?
So currently, as I also said in the very beginning, there is not a single country that would specifically have regulation in place for NFTs. So NFTs are current, or like the regulation that exists around NFTs is essentially made up of a patchwork of different regulations. So both from a financial perspective, you have the tax implications. Do you pay VAT, yes or no, on your issuance of the NFTs? Consumer protection is a really big thing. So, I mean, if we now look at the very recent developments when it comes to NFTs, especially in the States, that we currently had, you had three pretty prominent cases. You had the NBA Top Shot, you have Impact Theory, and the Stoner Cats. That were the Impact Theory and Stoner Cats. That was just like they came out, the settlement cases from the SEC just a couple of weeks ago. But there you both see that, or all of these cases, what they have kind of in common is the discussion on whether or not NFTs are securities. And I think that this is, it all also seems to come down to pretty much how do you communicate about your project. I think it's problematic if we're gonna take the high road and just say yes, all NFTs are securities, because that means that there is so much that you can still do with the NFT technology. There is so much innovation and development being made. Nobody knows which, we are seeing so many standards as well being developed that allow for different use cases for NFTs. You have everything from, ticketing to, loyalty programs and so on. Like, there is such a broad variety that I hope that we're not going to go down the route now started where we just say, look, all NFTs are securities harshly, and we try to look at it and say, what is it that we're building? What's this project building, and so on, and then we try to find regulation that would be more suitable for the project at hand, while still, of course, recognizing that especially consumer protection is really important to keep in mind.
What are your thoughts about NFTs?
Well, so I think the difficulty with regulating NFTs is that NFTs is like a container technology. Yeah, so an NFT could potentially be a security, but could be a ticket, could be just an image, could be like a digital right for something. And this is, I think, the misconception at the moment. So when regulators simply say like, okay, there is like rules for NFTs because this is like whatever you regulate HTML. Yeah, and so this doesn't make any sense to me, and therefore it's really about kind of we need to define kind of like what it's used for, and these use cases will have a specific regulation, but not the technology itself.
Yeah, yep, totally agree. So, Joanna, you mentioned consumer protection. I think that also is we have two perspectives. We have the business perspective. For them, it's a burden to keep up with all the regulations they have. They have to comply with them. But from a consumer perspective, they want to be protected, no matter if they buy a financial product or if they buy a loyalty program or what not. So, what would you imagine? What would you desire? What would you hold as thoughtful as means which could be implemented to give a good consumer protection when people buy NFTs?
That's a very good question. I think that what I would hope for is now, so we have a certain jurisdiction already in Europe that give out guidelines on what you need to include when you market financial projects or financial products. Also, what you need to include when you market crypto asset projects. Germany has something like that in place. France, the UK, especially, and so on. And those already give quite good guidelines as to enough information. So you definitely need to remember to let the consumer know what they're buying, what they can expect to get. So, for example, if you take an NFT project, you would want to preferably let them know what the intellectual property rights are that they are getting, especially if you're issuing a PFP project. But also, communicate, but very objectively about what they're getting, because that is also now the biggest sort of things that the SEC cases are latching on to, is that the consumers were made to believe that they were receiving, a higher value on their investment, whereby that then gives obviously the SEC a good gateway into just saying that there was expecting a profit made by others, so it would fall under the Howey test, so it would be a security. But so that is like the most important thing, just from a project's point of view in terms of the consumers, but also that the consumers. Yeah, that's essentially, I would say, the best way to protect the consumers, to give them enough information, and obviously also then to provide them with contact details for whichever project is issuing the NFTs that they're buying into, so that if there is a problem, they can contact someone. But also, obviously, then again, from a regulatory point of view, so that there is somebody responsible for issuing that project that can take the blame should you really, orchestrate a rug pull or whatever.
Yep. I think the best consumer protection for NFTs, from my point of view, is that actually producers of NFTs should produce more NFTs with a real intrinsic value. Because I think there's just this like long tail of stuff where I sometimes think, am I too old for this? But yeah, so I think the more valuable those really are, I think the better for everyone.
Yeah, okay, so what I caught from your statement is transparency is key. That if I issue an NFT, I should state everything which I'm about to issue and which I'm not. I think we all experienced the high times in 2021 where people were just like, had hopes in everything, and these hopes were not reasonable. Why would I buy like an NFT for 20,000 from a sports company, what would they give me? Or from a beverage company, would they give me beverages for till the end of my life that wouldn't be worth 20,000 bucks, but still people invested in it. But what I'm asking myself now is, do we need regulation for that, or can we just basically call for the honor of issuers that they do it also to protect their business, to have a good reputation? Is that sufficient that people now, like 2 years at least after 2021, issue NFTs by also moving or thinking a bit about the financial world with a kind of prospectus? We're saying, okay, my NFT is a loyalty program. It can be used for this and that. It can't be used for that. Will that evolve naturally now? Or do we really need some hard regulation saying you have to give a prospectus for an NFT?
So,
I think it depends. I think regulation per se might be a little bit of an potentially like overreaching, simply because if we, again, going back to what we have been discussing here, there are so many varieties of what an NFT project can be. So if we put, and regulation has a tendency, it is, for example, also one of the biggest criticism, right, to MiCA, that it's not technology neutral, because we made the checklist too narrow to sort of what needs to be included in a way in a project. And if we would regulate what you really need to sort of communicate to the consumer, it might be that some NFT project simply isn't, you would either have to build the NFT project differently than what you would want to, or you wouldn't be compliant in a way. So I would rather call for guidelines. It's like the white paper that's sort of included, as I'm mentioning also in MiCA, that as a recommendation, or an obligation in some cases, but that you put out sort of good documentation, and it should preferably follow certain guidelines, and then you try to make like these guidelines good enough to still enable flexibility for projects, but still make sure that, we have consumer protection already in place, so sort of to take into consideration what, like the most important consumer protection regulations would mostly come from financial regulations, probably. What you need to keep in mind if you promote a financial product, but also other things, for example, IP rights and so on and so forth, and try to include these, but rather guidelines than necessary hard regulation.
Okay.
Maybe one remark from my side, so in particular to transparency. So I guess from my point of view, transparency is very important, not only from a regulatory perspective, because it could provide more clarity on the characteristic of that kind of digital object, which might be an NFT or something else. So, and therefore, it is also from a legal perspective, so which rights are attached? So do I have terms and conditions also for a contractual arrangement between the user of the NFT or the issuer? And therefore, it is not only on the regulatory side, because that is also important to note, that beside our national regulatory framework and the upcoming MiCA, that is all supervisory framework. So that is no statement about the legal identity of the respective object, or of the digital object or of the NFT, and therefore it is really also important for issuer or a service provider to look into what legal or civil law requirements are applicable to such specific object, when it in particular is linked maybe to physical assets or so-called real-world assets, and therefore transparency is key, not only in providing consumer information, but also ensuring legal certainty what we are dealing with.
Totally agree. Last final remark?
You were asking about like if NFT producers need to create a prospectus, and I would say I would ask the audience, whoever read a prospectus of a financial instrument that you bought at your bank? I think nobody. Oh, okay, there's one hand raised. So I think, like Stefan and also the others said, it's about the transparency. We need to make clear what you're buying and what you're getting for, and from who and where and so on. But I think like writing prospectuses is not the solution.
Okay. Yeah. Also, I think it's a good last word. Transparency is key. Or last sentence. I really like that. Also, in my world, tax transparency is really on the rise. We see a whole lot more of that in the upcoming years. Thank you guys for participating in that panel here. I think you did pretty well. Hope you guys enjoyed it too. Also, thanks to the W3 Vision here for the W3 Fund for providing us the opportunity to be able to speak here. That sums it up. Let's hand it over to the next ones.
Yeah, thank you.
Thank you.
Thank you.